the doubts raised by the auditors, and of course, I mean, some of the questions which the qualifications themselves raised. Lata.
Well, actually, line by line, all the notes to accounts that were there in Kapil Vadhavan's profit and loss presented earlier have been questioned by the auditors and they have not signed. So basically, that number cannot be relied upon. I'll just take you through the line by line questions they're raising. First, there are the intercorporate deposits of about 5,600 crores. Kapil had given some explanation about some of them will be received quickly and others are being rolled over as term loans. Now, auditor says there is a deficiencies in the way in which they were granted and rolled over. The company has not given us how they evaluated those borrowers, credit evaluation of those borrowers. Company says they will remedy the deficiency, but we don't have any evidence of how they will do it. So that the amount questionable is 5,600 crore. The next is an unspecified amount, which is Cobra Post allegations. They were allegations of fraud and diversion of funds. You remember, an independent group of chartered accountants had been appointed by the committee. Now, what Deloitte says is that they advised more areas be covered, but their advice was not heeded. The CA report itself has not been approved by the audit committee. So, as good as no work has been done on disproving the allegation or clarifying. Deloitte says other agencies and other lenders are also investigating the Cobra Post allegations. Now, neither the old P&L nor the current auditor's report gives us what is the amount involved. So, we do not know the current value or the supposed value also. The carrying value also we don't know. There is another set of 32,450 crores which Kapil Vadhavan had pointed out and which he had marked down. This 32,400 includes one set of 16,500 crore odd loans where checks were received for these loans as interest payments, about 1,800 crore. They were not banked. Now, another 24,000 crore of loans, the finance committee had asked for the end use to be verified. That has not yet been provided. So DHFL totally had devalued these loans by about 3,200. That is what they took as provisions. That's why they reported a loss. Now, what Deloitte says is we can't vouch for any of these numbers. Whether the loans were granted properly, secured properly, we cannot guarantee. Then they have other tiny observations about NHB writing down the capital. They say we don't know, what will be the impact because the company is not providing us additional data. There are deferred tax assets which the company has assumed. Now, a deferred tax can be assumed if you will pay tax in the future years. But if your certainty about a going concern is not there, how do we attest for it, is what the auditors are asking. So those are smaller things. Basically, for about 32,400 crores of loans where, you don't know end use and where the checks have not been banked, plus that 5,600 crore of intercorporate deposits. If you add those, there is about 37,000 crores. Even after the write-down, it would come to 35,000 crores for which nobody is saying that the carrying value is what it is. That whole remains. And therefore, the auditors reiterate whether this can go on as a going concern. Because you don't know whether those assets can be realized. Since you don't know to whom the deposits have been given, the intercorporate loans. And you don't know whether the liabilities will be paid back by the company. So they're reiterating the question whether it will go on as a going concern. I have only one question after all this. After reading all this, why should the stock be 17% up? Doesn't make any sense.
I think DHFL, the stock at least, has a life of its own. But also, Lata, one wonders, with such serious questions being raised by auditors, I'm guessing the ICA, the inter-creditor agreement, will have to take some of these concerns on board because they are looking at a resolution with so many questions being asked on the asset side as well. So perhaps these are questions that have absolutely no answers, at least as of now. Maybe we'll get some clarity in the coming days. But thank you for that. On that note, let's take a very quick break. Up next, we will be discussing market fundamentals. Girish Pai of Nirmal Bang Institutional Equities joining in.
And that is our new office. सर ओवरड्राफ्ट 4 दिन से अटके। हाँ सर, आप बैंक को कॉल कीजिए।
We are expanding, Mr. Chang.
वेंडर पेमेंट्स
नहीं मिल गए।
आज भी अटक गए। आप जरा बैंक को फिर बैंक रिकंसिलिएशन प्रॉब्लम सर।
तो मैं क्या करूं?
आईसीआईसीआई बैंक करंट अकाउंट खोलकर इंस्टाबिज यूज कीजिए। आईसीआईसीआई बैंक इंस्टाबिज पे पाइए इंस्टेंट ओवरड्राफ्ट, क्विक वेंडर पेमेंट्स और ऑटो बैंक रिकंसिलिएशन जैसी 115 बिजनेस बैंकिंग सर्विसेज।
10,000 customers are celebrating life with the SUV that's above all. Join the league. Celebrate life with Harrier. Harrier, the SUV that's above all.
Welcome back. So the equity market has been in the doldrums for now. The selling has seen a bit of a let up, 6 points up on the Nifty, and we are holding this zone of 11,350 thereabouts. The question is, what next? Girish Pai, head of research at Nirmal Bang Institutional Equities, joins in. Girish, before I start getting your thoughts on numbers and earnings so far, just your sense on the wave of selling that's hit the market and the way sort of there's gloom and doom feeling all around. What are now sort of some of the clients that you interact with? What are people generally saying? Is there appetite to come in and buy even quality marquee stocks after such a drawdown? Or are people in a wait and watch mode?
So when we meet institutional investors, I think the focus is largely on a select set of stocks, the ones that have been performing or ones which are clean, where corporate governance is of the highest order, where there is visibility in terms of revenue and earnings growth. And while the valuation may be a little rich as we speak, that's where the comfort stands vis-a-vis the domestic institutional crowd. So I think the kind of cuts we've seen in the market have been largely driven by the foreign institutional investors, and I think they had held the market up in the first half of the calendar year. So if you look back in 2018, I think it was the domestic institutional investors which did the heavy lifting from a market perspective. I think the baton got kind of taken over by the FIIs in the first half of 2019. And now I think the fact that growth in India is going to be a little slower, driven by various factors, including liquidity, the NBFC related issues, the fact that banks are kind of pulling back on lending in certain pockets of the economy, could mean that GDP growth could be the 6.5% kind of range, and earnings growth is going to probably come off from the 20 plus kind of number that consensus is currently anticipating to maybe like mid-teens kind of a number. So it's that. I think the other thing that FIs are probably worried about is a potential slowdown in the US. That may lead to some kind of risk aversion for funds there. I think these are the things that are probably playing out in the market right now. If you ask me specifically of domestic funds, I think they're focused on the high quality names which are showing visible growth.
Speaking of growth, Girish, it has been coming down even for the best of the banking names. I mean, look at what HDFC Bank's numbers told us. Kotak as well. At least credit offtake has slowed down because of the environment. Now, what should the approach be to these stocks? Because even they are feeling the heat of this market meltdown. On some of these well-known, banking names, is this a great buying opportunity? Or do you think they will go in for a real round of valuation reality check?
So on the names that you mentioned, we continue to be positive, though I think in the near term there could be a downward bias to these stocks, considering the fact that managements have kind of indicated slower credit growth, going forward, at least in the next 3 quarters or so. So I think that I think the entry point could be timed a little better. Maybe this may not be the right time to get into some of these stocks. But if you take a long-term view, if you take a 3 to 5 year view, these are stocks which can compound at a fairly good clip. Book value can potentially compound between 15 and 20%. And I think the price to adjusted book multiples will probably sustain, or you may probably see a the numbers kind of come off in the near term, but my sense is over the longer term, the valuations can probably sustain. I think the financials piece, what we like the most right now is insurance, where we think the asset quality problems are not going to be dogging them. We think that growth there could be fairly sustainable. And we think the kind of competitive intensity one sees in the credit side is not present in the insurance space. So we like the insurance space a lot more than the bank space right now. And probably this is a time to actually get into the insurance companies as we speak.
Girish, short conversation today. Appreciate you joining in and running us through what you make of things as of today. Thank you indeed. Well, we slip into a quick break right now. The market is absolutely flat. There's a 4.5 odd point change after what we saw over the last 3 or 4 trading sessions. Big cuts. Up next, we get you a perspective from Venugopal Garre, Director of Bernstein. He joins us from our Singapore studios, and we get you the FII perspective. Venu's been sort of on road trips meeting FIs all around the world, and we'll get you his sense of what really is worrying them with respect to India. Back in 2.
Public issue of secured NCDs with interest rates up to 9.7% per annum. Shriram Transport Finance. Vishwas Jeet Ka.
Drive into the future, unleashing India's